What's up, Banter fam? I'm your host, Miles, and welcome back to the show. This is the first iteration of Thursday Banter, where I'm going to be getting in some of the brightest minds in DeFi and across the crypto space to have discussions on the market. We have a big show today. We're going to talk about the current state of the market, the current state of DeFi, future narratives that we're identifying to succeed in this market, and also give you our thoughts on the future and what is going on in the space. Welcome to the show, Patrick and Drake.
Thank you for having me, Miles.
Word up. What's up, guys? It's an honor to be here.
Yeah, I did a couple of shows with Drake in the past. We talked a little bit about RUNE. Unfortunately, since then the RUNE price has taken a bit of a hit, but it's not exclusive to RUNE. I think the whole market right now is struggling a little bit, and I kind of just wanted to pull up my Bitcoin chart to give you a little bit of an indication as to where I think we sit. So currently we are just range bound. We're trading in this very tight range. Now, yesterday, I thought that potentially we were going to break to the downside and we were going to test some of these lower levels, gobble up some liquidity closer to 26. However, we did wick back up into the range here, and we can see that roughly we are dealing with a 6 to a 7% range at the moment. So Bitcoin is essentially trading like a stablecoin. It's pretty boring out there, isn't it?
A little bit.
Getting real boring real fast. But I mean, yesterday, I think the boredom was subsided for a little bit with the massive price hit that, Ethereum took. And I think at the moment, Ethereum is really leading these altcoins. And when Ethereum takes a 5% hit, we are seeing 10 to 20% drawdowns in the overall altcoin market. And this coincided with Bitcoin dominance going crazy. So I drew in this trend line for Bitcoin dominance, and I noticed that we did break trend here, and potentially I do have targets closer to 50% now for dominance. So do you guys see this as a real threat to the altcoins, kind of Bitcoin gobbling up some of the alts liquidity at the moment?
Patrick, you can go first if you want.
Yeah, well, I think that this should remind people that no matter how good your project is, how good your devs are, at the end of the day, we're still all beholden to Bitcoin and some extent to the macro situation, right? I mean, stocks have been down tremendously as well this year. And yeah, my take on it is personally, I'm only comfortable right now being in Bitcoin and a select few blue chip tokens. To me, Bitcoin dominance is going up, and usually it takes some time to go back down.
So you fairly risk off right now. You're not sitting in some of these smaller cap alts. You primarily skewed Bitcoin ETH?
Absolutely, and to some extent also XMR, I think, has been actually outperforming Bitcoin over the past few weeks. And so to me, those old proof of work 2017 or earlier coins, those are the ones that are going to be around in the next cycle. And then there's probably a few layer ones that rose up this cycle that have almost established themselves as blue chips as well. But to me, those will move first, right? Those will move, we'll have a heads up, and then the smaller ones will move. So that's how I'm playing it right now. I'm focused on accumulating those blue chips.
Well, I think that's an interesting take because, we usually see Ethereum lead the altcoin market. So I guess, one of the safer approaches you can take in this market is, accumulating something like an ETH, because we're likely going to get the indications that the alt market is starting to heat up, and that gives you ample time to rotate. So that's why I'm personally gearing a lot of my DCAs, into Ethereum over these other alts, but I'm not neglecting some of these other blue chips, as you said. Potentially altcoins like your BNBs, your Solana are then now showing signs of potentially surviving this cycle. I mean, we have a little bit of a ways to go in terms of this bear market potentially, and I'll get into that in a second, my price targets, etc. But, as you said, there's only really been a few coins which have survived a bear market previously, so proof will be in the pudding with a lot of these alts.
Yeah, I also kind of echo that. But what's really important to understand, you can kind of correlate this on the charts as well, but a 0.5% interest rate increase or decrease actually affects the overall market with the S&P 500 by about 20%. I know it doesn't sound like much, but a 20% move from just a 0.5% raise or a drop actually affects the market overall as a whole by 20%. Now, if the S&P 500 is moving 20%, what do you think happens to Bitcoin? Well, you just saw it happen. Bitcoin literally dropped, what was it, 60% or 65% from its peak? ever since we first got the first announcements of the interest rates. Now, with that in mind, the interest rates are going to keep going up as far as they tell us. And the markets are usually forward thinking. So right now, in my opinion, it's literally just Bitcoin and Ethereum season. Yes, you can look at some other altcoins. And like Patrick was saying, XMR, which is pretty interesting. I like XMR as well. Not financial advice, of course. The reason I like XMR is because it actually has a utility. Now, it sounds really bad, but it's used on the dark web. And going back to Bitcoin and Ethereum season, Bitcoin is going to see the least volatility compared to something like Ethereum. Right now, you are seeing this. Ethereum is slowly degrading against Bitcoin on an ETH and Bitcoin chart. You can kind of see how Ethereum is slowly being eaten away. If you still want your Ethereum exposure, just make sure you diversify it with both Bitcoin and Ethereum. And a pretty good way where you can actually earn a yield on it. I will notate that, yes, using wrapped Bitcoin is still a centralized option, but you can provide liquidity on Uniswap or SushiSwap with wrapped Ethereum and wrapped Bitcoin, which in doing that will actually give you some trading fees and the volatility, as well as keeping exposure to both tokens. You can also use a balancer token or even a protocol like GMX, which will give you exposure to stablecoins, some blue chip exposure, really, really small exposure to Bitcoin and Ethereum. And it also pays you a yield in it. The yield is actually
you
organic.
made an interesting point. I think the interesting point you made was, about kind of like the stock market moves and the correlation, to Bitcoin. I think something interesting has actually happened in the last couple of days, and that's we've seen a decoupling of sorts. I know a lot of people were kind of screaming for the decoupling. It's something we've wanted for a long time, but unfortunately, I think it's kind of happening in the reverse. It's happening in the opposite direction. And it's basically the correlation with equities is now broken. So I did chart the NASDAQ against Bitcoin right now, and we can see since last week, the NASDAQ is up roughly 7%, and then we've got Bitcoin minus 0.25%. So we're getting little bounces in the stock market now, but crypto doesn't seem to be responding. Why do you guys think this is the case?
Well, I think one thing that people need to recognize is that Bitcoin as a tradable asset has never really existed outside of a prolonged growth period in the global economy, and also a bull market in the stock market, right? So we don't know exactly how it's going to behave now that seems like we're probably heading into a recession, and the S&P 500 is entering a bear market. And just one thing I want to caveat that with is the time to panic was a few months ago, right? The time to panic was when alts were 2, 3, 4x what they are now. But that doesn't mean that people should say, okay, that means the bottom is in, right? Because we don't know, and probably it's not just going to go down and bounce back up. Usually it's going to consolidate on the bottom for a bit. So we'll have, unless there's a freak black swan event like March 2020, probably we'll have some time to realize, okay, it's found its bottom and it doesn't want to go any lower.
Well, yeah, let's have a look at the stock market. Jurien Timmer, he is going on Friday Banter tomorrow with Ran. He did a little bit of a take on this through a thread. He said, history helps to interpret the market right now, and the current market decline is reminiscent of the post-World War II hangover period, which produced a 26% drawdown in the SPX. And he goes through and he says that the decline only took 5 months, but contrary to the early 20s, it took until April 1950 to finally overtake the 1946 high. Now, I know this is a long time ago, but I think it's still an interesting comparison because during that period, the stock market languished around lows for 3 years. The bear market was entirely a valuation reset with the PE ratio contracting. I think we're already seeing this across tech valuations. You've got Snapchat, Amazon, Facebook, these big tech stocks actually have dropped more than Bitcoin year to date. Not since highs, but year to date.
And that's your answer why people are flocking to those right now instead of Bitcoin. It's because they're super cheap and they have earnings compared to Bitcoin.
Exactly. They've got real earnings, real tangible backing. I mean, at the end of the day, they're real companies and they've been hit just as hard. So that actually, does make sense in terms of like where these funds and, where retail investors may want to allocate their capital. So Jurien says the price is at an intersection of value and earnings. And so far we have only experienced a PE derating to reflect the outgoing liquidity tide. But if the E and the P starts to fall, then we are not out of the woods. So potentially, a further drawdown in the NASDAQ is possible. It's something that I'm certainly looking at. And my price targets for Bitcoin kind of do rely on how stocks behave. So when I did chart the QQQ, I'm seeing potentially, I mean, this is kind of my bear, my bear scenario, but, we can see that we're still largely overheated, and there's potentially, I wouldn't say we're overheated anymore, but there's potentially another 10% downside there to get back to that support level. And what would a 10% drawdown in the NASDAQ do for Bitcoin? Like 15, 20%. It could potentially, potentially hurt alts another 50 to 70%. So if we're looking at the bear case on that side, then that's certainly not out of the realms of possibility.
So me personally, I think alts are going to get obliterated if Bitcoin or Ethereum gets hurt on that. But in general, price targets, it's really hard to say a price target for both Bitcoin and Ethereum. I do know the trend is pointing down right now. And I think one of the biggest signals we need to look for is the Fed either stop rising rates or lowering the interest rates. If they're going to keep increasing the interest rates, you're going to keep seeing further downside, just everything in general. The reason being is because the cost of debt is so expensive. A lot of these companies that are actually functioning on razor thin margins, even like 0.5% or 0.25%, affects their earnings by massive amounts. And when stocks are crashing, Bitcoin crashes. And when Bitcoin crashes, this happens to the alts.
We've got a couple levels off the back of that. And I mean, they're really just levels, horizontal levels based on, previous support and resistance, which does matter in TA. And I think, it's well known that a lot of people are screaming for 18K. That is kind of the level I'm hearing a lot about on Twitter. 24K would be the other obvious one, in my opinion. And then obviously, we still have that 26 to 27K range, which was the last, time we got a wick down. And in the past, what we've seen is that when Bitcoin has a massive wick like this, then typically what will happen is it'll kind of trend towards the bottom of this zone and kind of recapture liquidity. So that's something I'm seeing as a potential short-term move for Bitcoin. But as you said, it's very hard to give an accurate prediction because the market's just so volatile at the moment. So let's have a look. Let's have a look at DeFi, because I think DeFi is one of those sectors which has been hit much harder than other areas of crypto. I think we're seeing a bit of a risk-off approach to DeFi in general. So I want to have a bit of a discussion on the current state of DeFi, and where we think it's pivoting, because we look at DeFi Llama right now, and we can see that a lot of these chains are getting smashed, obviously with Terra basically being obliterated. The
Tron's
Ethereum
killing
dominance is right up. Yeah.
Yeah, Tron is flipping the script on this bear market, right?
Yeah, if we keep seeing that,
Tron?
we're going to go lower. That's all I can say. That just means leverage and speculation is still in the system.
I mean, this is pretty crazy. I've already given my opinions on USDD. I think it's slightly better than UST, but at the same time, I am skeptical. It's in my opinion, it's probably just not the season to be investing in algo stables, but clearly the market doesn't care.
I see that as well. It's sad, but it is what it is.
So you're not getting into USDD then?
No, not touching it. Not touching it.
What about you, Patrick? Are you aping?
It was tempting. Back in 2017, 2018, I lost over 90% of my savings on Tron. So personally, I steer clear of that ecosystem.
I mean, the biggest thing
is the trend here. Sorry, Drake. What are you guys seeing is the trend here in general with DeFi? So do you think investors are making an approach to go risk off, or do you think the Ethereum dominance is going up as a reflection solely of Luna? Do you think this trend will continue? Like, how are you guys viewing DeFi? Because obviously, DeFi is a very broad term. Decentralized finance constitutes a large, percentage of the crypto market. So when we look at, the previous history of DeFi, it's quite in its infancy. Compared to other sectors. So when I look at DeFi, I'm kind of thinking there obviously was a lot of Ponzi's. There was a lot of hype. A large amount of DeFi protocols were reliant on hype and speculation. We saw that across many chains, Fantom being an obvious, retail dominant chain, which took a hit. How are you viewing this going forward?
So for DeFi and in general, I think we're going to find the projects and protocols that have a good runway and have a sustainable yield that are going to take dominance. Going on the runway, if devs can't eat, they aren't going to build. So you want to look for projects that have a strong runway. You also want to look for a yield that is sustainable. If their yield is in their token, or if it's mostly just through inflation of their token, that's going to be a problem, because that's going to be a reflexive flywheel on the way down. Just like you have one on the way up, it's the opposite on the way down. So if they're paying out $1 million when their token is worth $1, they're going to have to issue twice as many tokens when it goes to 50 cents just to do the same effect. And then also, if it goes to 25 cents, you have to do 4 times the amount. So you're going to have massive inflation. And the more tokens you emit, it's just going to create this dumpster fire on the token. So preferably having treasuries for the team in general, because they're going to be dumpers as well. So they can eat in a treasury that's not in token. And when I say not in token, it's not the actual token that's theirs. So preferably like Bitcoin, Ethereum, stable coins.
I think there's two elements to this.
The era of valueless governance tokens is, in my view, over, right? For certain tokens, people had this thesis that eventually they would start paying out fees to token holders. And that if that hasn't happened now, then I think people are going to have a tough time justifying the value of those projects. Whereas if they're paying out fees directly, like certain projects like GMX, which we mentioned earlier, are, then there's a very clear value proposition there if you're holding and staking the token.
Bruce is saying, stop wasting our time, mate. Come on, tell us when you guys know more. Well, I'm about to tell you in a few minutes what the narratives I'm identifying for the next cycle is. This is the time to be researching, digging deep on research, and actually, pivoting towards a place where you're setting yourself up for the next bull run. And I actually do have a good indication of what's happening in DeFi right now, and Drake spelled it out for me. He said the first element is runway. So projects need runway to survive. As you said, if the devs can't eat, they're not going to code. So projects need runway. So what are some of the ways we can identify whether a project has runway or not? One of the ways you can do so is by speaking to the teams, getting involved in the Discords. I think one way definitely to do it is to kind of try and manually gauge the sentiment around how the team's performing. Have they slowly dropped off with their communications? Have they stated anything that's slightly iffy? Have their partnerships closed up? That's certainly one way to do it. And the other one is to simply examine their market cap, examine their earnings, and do a little bit of digging yourself and work out what their market cap is relative to how much tokens the treasury holds, and then how much they'll potentially need to survive. So runway is the first one. And then my other point is that protocols that incentivize fees and not liquidity will be the ones that win in the end. I mean, right now, and throughout the last couple of years, as you said, Drake, a lot of these protocols, they relied so heavily on emissions incentivization to accrue new users. But the problem with that is it's simply not sustainable. And we're seeing now the effects of that come to fruition, where a lot of these emissions are just starting to dry up. So DeFi has a huge problem because people can no longer go in and ape into 500% yields on their favorite protocols because tokens simply aren't emitting. And when they are, they basically become worthless. So I think personally, it's pivoting towards revenue generation, fee generation, and I'm looking at websites like Token Terminal and the block to kind of justify which protocols are actually making revenue and which simply aren't, and they're just emitting tokens.
And some are actually growing in revenue, right? Some have managed to grow even over the past few months.
What kind of what protocols have you identified that have been growing or kind of bucking this trend?
Well, of course, this is subject to change at any point, but one that I noticed was Lido. If you look on Token Terminal, Lido has been consistently growing revenue, which probably has to do with people potentially going risk off and staking ETH as a form of risk off yield, or potentially hype leading up to the merge on Ethereum. Another one, interestingly, that's been growing in revenue is Tornedo Cash. And I don't really have a good explanation for why that is, but
hacks
potentially. Yeah, maybe there's been more hacks, but Tornado Cash revenue has been growing quite strongly recently.
This guy said, if you're not buying now, you have no balls. Well, I can tell you that I kind of am buying now. And when I say I am buying now, I mean I'm doing my regular DCA strategy. So I'm DCAing into Bitcoin, DCAing into Ethereum, DCAing into some of these stronger L1s. I am also of the belief that we're going to see lower levels. And I'm of the belief that, even the levels in the altcoins we're seeing today, we're the likelihood is, the balance of probabilities is, we'll probably see these levels at some point within the next 6 months anyway, whether that is coming down back to these levels or pumping back up to these levels. We're likely going to see them again. So that is why I'm personally not rushing into some of these smaller cap alts personally, but I am DCAing into the larger caps a little bit, with 50% of my income, and then the other 50% is going to stables, so I can continue to maintain stables, because you just don't know when the bottom of this market is going to be. So I don't want to be completely out of the market. I don't want to miss the boat on DCAs, but you do have to make sure that you are holding a large percentage of stables in this market, or you'll get wrecked. So are you guys following a similar pattern, or are you completely sitting on the sidelines right now?
So me personally, I have a portion of Bitcoin and Ethereum, and I also have some hard assets. Yes, I do hold a little bit of smaller altcoins, but in general, I already know it's going to be Bitcoin and Ethereum dominant season. And even if you miss the trade, it's better to buy in at a higher price than think you're getting in lower, because these altcoins will get completely wrecked. It's just going to happen. Whereas people already look to Bitcoin and Ethereum, and those are already labeled as they're labeled as not securities. So they aren't even securities, and people are going to look into these and be like, okay, well, I want to get exposure to smart contract platforms. So they buy Ethereum. Oh, I want to get exposure to digital gold. They buy Bitcoin. It's not smart contract platforms. Oh, I'm going to buy Avalanche, or oh, I'm going to buy Fantom. People aren't looking at those, especially when you have a small amount of money, or if you have small money coming into the system, they're going to pick the big dogs. And I know I hate to say this, and I do hold some of the altcoins, but they're going to get obliterated. That's if Bitcoin and Ethereum dump, obviously.
They already have got obliterated, though. I mean, I know that doesn't mean they can't go down another 90%, but, blood is already on the streets. I wouldn't say that.
Let's look at ICP. Look at ICP.
Okay.
ICP
I hate
came
this
from
example because it's a shit coin.
Yeah, that's true. But we'll see some blood.
So you think we're here? Oh no, you can't see my screen. You think we're here?
No, I see ICP is going to go down to even less than that. Where it's at now, it's like $8 right now, or $7. What is it right now? Oh, dude, it's $7. Like a week ago, it was $8.
Yeah, I think it's like $7 now. I mean, but this is an example of something with very little utility in this market. Hardly any transaction volume. I don't really understand the model beyond the massive VC backing and subsequent exchange listings it had in the very beginning. So you're saying that you're seeing a bleed like this potentially from alts, or do you think we can see some relief first?
Let me ask you this: what's the utility? I'm not fighting bags or anything. I hold some Fantom. What's the utility of Fantom right now?
Well, I mean, a bet on Fantom is a bet on the future growth of the network. So
that's correct.
Utility
it's the future growth. That's the risk on. That's the risk on part. People are fleeing from that. So what's the utility of Ethereum or Bitcoin?
I mean, Ethereum's essentially a gas token. It's moving to proof of stake soon. I mean, the utility of Bitcoin, it's a store of value. Digital gold, it's kind of like Bitcoin is more of an inflation-esque hedge. Not that it's proven itself to be a reliable inflation hedge yet, but that's kind of where I see the narrative, at least.
Okay, so now that you already have those two narratives the two buckets for the narratives, you have the digital gold and you have the smart contract platform with all your NFTs and transactional volume on those chains. Why would you go on the others when you have these? Sure, they're cheaper, but if there's never new money or enough money coming into the market to even fill these buckets, those buckets are not going to get filled
in the short term. I think I'd counter this by saying that we need L1 power. Like, if we are truly proponents of the fact that, crypto is the future and we believe in DeFi, which I personally do, then one L1 is not going to cut it. We're going to need multiple ecosystems, interoperable ecosystems, because we'll need L1 power. Like, Ethereum is, even with proof of stake, is hardly scalable. Like if we look at traditional finance payment rails doing 500 million transactions a day, and then we look at Ethereum doing 1 million a day and struggling, it's like, man, we're going to need multiple L1s. But you're right, that does rely on the assumption that, you know, there is future growth to come in the market to kind of get up to the transactional volume of these traditional rails.
100%.
We'll
And
we'll need other layer ones.
Oh,
But
yeah.
will they be the same layer ones that dominated this cycle, right? I tend to think
the point
AVAX
I'm
will
making.
survive. I tend to think Solana will survive just because of the amount of projects they've accrued and the backers. And I tend to think Polkadot will survive actually as well.
I like
But
Dot a lot, yeah.
But do we know that some of these other layer ones will still be around? I mean, look at Neo, look at EOS. I know someone who DCA'd into Neo from 2017 through 2020, expecting it to race back to its previous dominance, and it never happened.
Yeah, I think that's the biggest point
L1s.
with these L1s is the L1s with Runway. That's what you want to look for. The ones that have money to work with.
Okay, so when we look at L1s with money to work with, the obvious one that stands out to me, there's two. Probably the first one's Near Protocol that has massive VC backing now, and I think the ecosystem is developing nicely. So that's certainly in my top 3 accumulation list. I'd also put Solana in that category, and right now you can't really fade, although there's centralization concerns, you can't really fade what BNB is doing either. I mean, that CZ has the partnerships to make it happen. And I mean, it has shown the most strength out of any L1 right now. I mean, it's up 7.4% for the week against basically every other L1 apart from, you know, Tron, which is obviously being pumped by USDD. I mean, they're all getting smashed.
Yeah, Polkadot's got a lot of money too.
Let's talk about Dot for a second, because you know, one of the questions I was going to ask is, what narratives do you think will be prevalent in the next cycle? Because, you know, right now is the time to build your watch list. Right now is the time to position yourself for the next cycle, or at least think about positioning yourself for the next cycle. So when I look at the history of something like a Polkadot, you know, it was a bit premature for the last cycle. It wasn't really usable. The UI sucked, and it still sucks in a way. And, you know, not much development happened. They didn't have the parachain auctions. They got delayed and delayed and delayed. So Dot kind of wasn't really ready, in my opinion, and that's why the price action has been so poor. But do you guys think that this next cycle, you know, that is about to happen, whether that's in 6 months, a year, however long it takes, do you think that Polkadot can be one of these protocols that's now ready to rip, now that the developers are actually ready to start shipping some of these products?
I think for that would be a good trade, because we really haven't had interoperability season, I guess you can call it. I think that's going to be a good narrative. Like, we've already had the L1 narrative, we've had NFT, we've had DeFi, we've had GameFi, and I think the subnets or interoperability season will be kind of an interesting narrative. Now, I'm not saying it's going to take off, but eventually I feel there has to be some sort of rotation to it. Eventually, I don't know when it is, but I see it happening.
Yeah, and are you similar, Patrick? Do you view interoperability? I certainly do, but I'm interested to hear if you agree with that sentiment.
I absolutely do. I think one thing that people should keep in mind with Polkadot is that many of the applications being built on it are not necessarily geared towards the same sorts of degen retail traders that many applications on other chains more, which means that you shouldn't necessarily expect these same sorts of rapid hype cycles with inflows of money. Because if, for example, you have Centrifuge, which is working on allowing collateralized loans from real world assets, something like that isn't the sort of thing that people are going to degen all into all at once, right?
Yeah.
It's the sort of thing that will grow steadily over time, like a real business.
I agree for sure. And, you know, when we talk about interoperability, there's a couple other plays as well. Maybe it's not fully an interoperability play, but I'm still pretty bullish on RUNE as kind of that cross chain, that cross chain DEX that I think it started to get some prominence towards the end of the last hype cycle, but unfortunately, I don't think it really had its time to shine yet because of that run. Are you still bullish on RUNE long term, Jake?
Oh, uber bullish on RUNE. I actually still hold my RUNE. So, of course, this is not telling anyone to buy it. I think the biggest thing that happened with ThorChain were a mix of a couple of things. The first is with Luna and UST, kind of the deflation from that. The second would be with ThorFi. They kind of took a couple steps back with all that happened with Luna, which is a good thing. They're actually thinking about like a little more what the what's actually going to be developed with ThorFi. So I think eventually they'll roll out some sort of model with it. But in general, as a whole, ThorChain is a reflexive, or the RUNE token is a reflexive token. So as it winds up, it does the same exact thing winding down. If people withdraw TVL, it also causes the RUNE price to go down because you're withdrawing from it. And also the APRs go down. So it's reflexive in both ways. And eventually, if enough people withdraw or if some whales get in, that'll have that reflexive flywheel up. They have a good runway. So I can say that.
Yeah, it's kind of one of those protocols that I think in a bull run will be one of the best performers because of that reflexive nature. But in a bear market, as we're seeing at the moment, it's getting hit a lot harder than other protocols because, you know, as liquidity is withdrawn, the APRs drop. Or, you know, RUNE isn't needed to be paired with other assets in the Omni pool. So we kind of see some, you know, I guess we see a bit more downwards momentum from a token like RUNE than other tokens. But speaking of, you know,
I do want to, before we
the...
leave RUNE though, I want to make one interesting note. They did make they're going to be making a move to where instead of having to deposit an asset and have exposure to RUNE, they're going to allow people to single side RUNE and single side Bitcoin without impermanent loss. They're still working on the formulas with it, but like if you want to deposit Bitcoin, you'll have no impermanent loss and you'll still earn a yield. So it actually doesn't split at 50-50. It's interesting how they're going to work out the formula for it, but we'll see more development on that. So
something to look forward to.
Yeah.
Do you have a timeline on that development?
I don't have a timeline. I was talking with Chad few days ago. Actually, if you go on their Discord, they're actually talking about it right now, and you can kind of get some updates and see what's going on with them. So
awesome, and I highly recommend joining Discord.
Yeah, for sure.
Join Discords in general. That's like my number one tip for a bear market. Now, talking about future narratives, Patrick, you did a very interesting thread the other day, and I'll let you run through this one because you know it's your thread, and you talked about these Soulbound tokens. And yeah, can you kind of run me through your thoughts on Soulbound tokens and the utility that they may have in the next cycle?
Yeah, absolutely. So first thing that I would want to sort of put out there as a backdrop to this is that the best narratives that'll have the best returns are the ones that come out of nowhere, right? NFTs basically came out of nowhere. They existed, but no one was talking about them. DeFi to some extent came out of nowhere in 2020. Soulbound tokens are a new token standard that Vitalik proposed a bit back, but he co-authored a paper about it earlier this month. And basically what these are they're similar to NFTs, but they cannot be transferred. And, you know, at first glance, people might say, you know, isn't that a honeypot? Doesn't that make it lose all its value because you can't sell it? But there's actually a lot of use cases where you would want something to be non-transferable. So imagine you wanted to create a DAO where you had to do some sort of accomplishment to join, right? You had to lift a certain amount of weight, or you had to work in a certain profession. If you allowed people to buy the NFT for that DAO, that would defeat the whole point because membership is signifying something that can't be bought. It has to be earned. So SBTs are basically that. And that opens up a whole lot of cases because basically it allows you to create a digital identity that's tied to your wallet that can't be bought or sold. It has to be created. And although you won't be able to invest in them themselves because they won't be able to be bought, what people might be able to do is invest in protocols that are related to SBTs.
Interesting. So what kind of protocols do you think could come to fruition in terms of facilitating SBTs? Will these be built on typical layer ones, or are they going to be specific protocols which are geared towards SBTs?
Well, given that Vitalik proposed it, I'm guessing that they'll be built on Ethereum. I think the one holdup right now is that if you have an identity that's tied to your wallet, there needs to be some way to recover that wallet. So the sort of the key feature that Vitalik identified that needs to be created first is community-based recovery for wallets before you can fully implement SBTs. And he estimated that by the end of this year, they'd be ready. And so that's why this would be something for the next cycle, right?
Yeah, and I think that's so important right now. We are prepping for the next cycle. It's not time to get despondent. It's not time to sulk. It's time to grind. Like I woke up at 7 a.m. yesterday and I went to bed at 3 a.m., almost 21 hours of straight crypto, because I'm literally grinding right now. Like, that is literally my number one priority and motivation. It's to do as much research as possible, dive as deep as possible, because I want to benefit maximally from this bear market. And, we saw historically the ones that dedicated themselves in 2017 or 2018, 2019, they were the ones that profited massively in 2021. So I think that right now it's the time to double down. It's not the time to stop paying attention. In fact, it's quite the opposite, because we're going to see some of these narratives that are very, very quiet right now. If you can identify them, and we've spoken about a couple of them on the show today, if you can identify them, you can potentially set yourself up for massive gains in the future. So what are your tips for the bear market? Do you guys have any tips of how people can conduct research? I've done videos on this in the past, but I was interested to hear your opinion as well.
I was talking with Nick Drake on. He's on Twitter as well. You guys should check him out. He made a really interesting point to me. He was like, look, if the community doesn't know what they're talking about, or if they don't have a knowledgeable understanding of a project, you should probably pass on that project. Because if that token is going down and they were only in it for the money, or if they don't really understand exactly why they're holding the token, what are they going to do? They're going to dump it as soon as there's fear. But if they have conviction and understand why they're holding the token, and an easy way to do this, this is what he mentioned, and it makes complete sense. Make sure you guys check him out. Seriously, this guy's smart. But you ask in the community and say, hey, what happens with this? Or, hey, how does this work? And if someone's like, oh, you're fudding, or if they're like, oh, hey, yeah, it just means token go up type of thing, and not really having a knowledgeable explanation, then you should be really scared. You should, not financial advice, but you probably shouldn't be holding that token. Now, of course, there are dumb people in Discord and just goofballs. That doesn't stand for the whole entire community. But seeing things like that and having people that are not knowledgeable or have conviction on their token, then you should probably be pretty scared.
Yeah, you basically have to, every single token you hold, you have to know exactly why you're holding it, and obviously have conviction. Otherwise, you, as you said, like, how are you going to hold onto a bag when it's dropping 50% if you don't know what it does, or you don't know where it fits in to the scheme of crypto? So I think getting involved in these discords and building our communities is the number one way to kind of learn in crypto. And I said this in a video yesterday. I said working in isolation isn't what crypto is about. I think creating networks, creating a research group, and potentially meeting up with them once every week, once every few days, that's the best way to learn. Because if you can leverage other people's skills, and you can niche down and focus on one particular sector of crypto, I mean, that's the best scenario ever, because you're sharing your skills with other people, they're sharing their skills with you, and you're kind of cross-sharing information. So that would be my number one tip. Start creating research groups, guys. Start scheduling calls. Maybe you can do it through Discord. Maybe find people on Twitter. But doing it in isolation is going to be very, very hard during a bear market. And if you could do it with others, that is going to make the journey, one, so much more enjoyable, and two, so much more profitable in the long term as well.
Mm-hmm. One heuristic I find helpful is I say, which applications am I using? Which ones do I find helpful? And if I find it helpful, probably other people do as well. And this has led me to many, many good crypto investments early, just because it turned out that other people did find it helpful. And if you get there early, then you can be there. You can invest when it's still low.
Exactly. I think that's a major component. Well, we covered a lot of ground in this video. I think the one thing we should end on, and we've spoken about it a couple times, but it is the title of the video. So, is Bitcoin going lower? What are your opinions? Your final opinions? I personally think, just before I flick it to you guys, I personally think that, I mean, after 8 weeks of straight downwards momentum, it's hard to see. It's hard to see a scenario where we don't get a green week soon. Like, just historically, it's getting kind of crazy. I know correlation, causation, isn't necessarily a thing here, but I think that a relief rally is probably likely at some point. That's just my gut feeling. But at the same time, when I zoom out a little bit, I do have lower price targets from a macro perspective. But I'd like to ask you guys as well, how low can we go?
So me personally, until the Fed changes their tune, I just see us going lower. I mean, sure, there may be relief rallies, but overall the trend is down. You can trade it if you want. That's entirely up to you. But I would say consider it like your DCA position. Maybe throw in a little here, throw in a little there. With the coins that you're buying, if you can't close the screen for a year or two and come back and see what it looks like, you shouldn't buy that coin. Like, just straight up, don't buy that coin.
Unless it's a trade. Like if you're a long-term investor, unless you're swing trading or kind of playing into a narrative, you know, a little bit of hype or speculation, then you're right. If your primary focus is as a long-term investor, then yeah, you have to have a long-term outlook. But I do have a percentage of my portfolio which is shorter term as well. Like, you know, DeFi Ponzi's can make you great money, as we all know. So regardless of how much we hate them, there are still opportunities to make money off meme coins and Ponzi's, but you just got to get out and just get out while you can. I think it's probably the mistake, you know, myself has made at times and a lot of people have made. It's not taking profits when we've hit those massive gains. And Patrick as well, what's your opinion on the market right now?
I think relief rally or no, until the macro situation reverses, it's really tough to imagine that we don't see these levels and see lower. So that's what I'm expecting, but I'm personally preparing for any eventuality. And like you said, sometimes doing small short-term trades can be a fun way to stay engaged and keep your finger on the pulse of the market without actually committing all of your portfolio full risk on.
Well, I just wanted to say thank you guys so much for joining. I had a lot of fun. We'll do this in the future for sure. I have linked both of your YouTubes and Twitter in the description, so everyone go check out their Twitters. They put out great content. We've got Patrick's Twitter there, and also Drake's Twitter here, and they also have YouTube channels where they make videos. So thank you guys so much for joining.
Dude, it's an honor to be here. Thank you. I appreciate it.
Thank you very much. And remember, as the official show sponsor, if you do want to trade any of these projects we talked about in today's video, use 1inch, one of the cheapest aggregators, cheapest dexes on the market. So I personally use 1inch as well for all my swaps. So make sure to use them if you're swapping using a dex. All right. Thank you guys so much. I'll see you in the next show. Peace out.
Cheers.